told you could double your money in 1 month? Albert Einstein said compound interest was the strongest force in the universe. And you know who agrees with him? Warren Buffett and Charlie Munger. And while those two don't understand cryptocurrency, they do understand investing. Munger said, understanding both the power of compound interest and the difficulty of getting it is the heart and soul of understanding a lot of things. That difficulty is very real. But today, I'm going to show you a very rare daily compound interest investment that can double your money in 30 days. I know that sounds too good to be true, but I'm doing it and it's working. And I'll explain why I'm sharing this investment. Hint, it's not because I'm a selfless martyr saint. By the end of this video, you'll know how to profitably stake your crypto in today's market, where it seems like everything is trading sideways and big wins are hard to come by. Welcome to The Point with me, your host, Austin M. Craig. Today, I'm going to tell you about Giddy Coin. But before we get started, let me give you all of the disclaimers. This is not financial advice, and I'm not your financial advisor. And even if I was, I probably wouldn't legally be allowed to advise you to get into DeFi because it's extremely volatile and there are multiple points of potential failure. Caveat emptor, do your own research. This is for informational purposes only. Don't invest more than you can afford to lose. And remember,
no substitutions, exchanges, or refunds.
Also, important to note, I'm not a dispassionate third party on this. I know some of the founders of Giddy, I'm friends with some of them, and I've staked a portion of my own portfolio there. So, full transparency. Okay, with that out of the way, let's dive in. Giddy is a startup out of Salt Lake City that is aiming to make the notoriously complex, convoluted field of DeFi easy. If you don't know, short for decentralized finance, DeFi is an umbrella term for peer-to-peer financial services on public blockchains, primarily Ethereum. That's Coinbase's definition. I will add myself that DeFi is also increasingly happening on Ethereum clones and other blockchains with varying compatibility. Conventionally, with regular fiat money, if you want to engage with financial services as a lender or borrower, or engage with derivative assets, there's just one way to do that. You work with a financial institution, like a bank or a brokerage, and those banks, being heavily regulated, have to do things a certain way. It requires paperwork and long waiting periods and many, many middlemen to move your money around. And they all take their cut. By the time they're done, the portion taken, a little here, a little there, it really eats into your investment. Remember we talked about compound interest at the beginning of this video? Well, that cuts both ways. Reduce your returns by just a small percentage, and over time it can make a huge difference between mega profits and just barely scraping by. DeFi does away with all of those middlemen. Using cryptocurrency and smart contracts, your money can be deployed as quickly as the network can process it, usually in seconds to minutes, rather than 5 to 7 business days. Fees are usually dynamic and based on network bandwidth at the time, which can make things much cheaper or, hundreds of dollars. I'm looking at you, Ethereum. Get it together, figure it out. I'm not a big fan of the giant fees. Anyway, back to the point. Giddy, this Salt Lake City startup, looks like it's trying to build Coinbase for DeFi. Very easy, very approachable, all available from a mobile app, and this is a tough nut to crack in a lot of different ways. I know Coinbase itself is purporting to offer some DeFi services, but it's not real DeFi. It's just as centralized as the rest of their business. But Giddy, so far, gives me confidence that they might actually be able to pull this off. For one, Giddy is non-custodial. What that means is they never handle your money personally. You're not trusting them to manage it like you do with every other traditional fintech like Robinhood or Coinbase or PayPal. When you deploy using Giddy, it's going straight into a smart contract. Those can be audited and checked for security, and they offer full transparency on funds going in and funds coming out. You can send when you want and pull out when you want, and it happens at the speed of the network, which in my experience is seconds, sometimes minutes. Giddy hasn't been around for very long, but don't worry, this doesn't appear to be a fly-by-night rug pull situation. The founders are all very out in the open, fully doxxed, and they don't look like the type to flee the country with their users' money. That's kind of hard to do when you have institutional investors. They raised an $8 million seed round at the beginning of the year. And when you have regular corporate offices, the CEO and co-founder Eric Parker has made it very clear that transparency is important to the team, and so far they've demonstrated that commitment.
Giddy is going to change the planet as far as DeFi is concerned. We are a non-custodial wallet. You don't have a seed phrase. It's recoverable. And then moving on to the next step, fiat on-ramp, super easy with us. I see cryptocurrency as clarity, not opacity. Like not shadowy super coders, but doxed, talented people who have respectable careers. That's what we've got.
Honestly, there is much more to talk about with Giddy than I can go into here. The Giddy mobile app has not launched yet, but you can sign up on their waitlist with my link down below. Please do that, it'll move me up in the line. But while we're all waiting for the app, they did launch their token on April 7th. And for those ready to stake crypto, you can be rewarded with Giddy tokens for the next year after launch. Here's how it works. You can see all of this in the dashboard at coinlaunch.giddy.co. Right at the top, it says they're streaming out 1,561,445 Giddy tokens plus change daily. Those tokens are sent to users staking in any of several liquidity pools, including Giddy Coin itself, the Giddy USDC pair, USDC, Wrapped Matic, Wrapped ETH, Wrapped Bitcoin, Aave, DAI, and Sushi. Look at that second column. That's the multiplier. This indicates what portion of the 1.5 million daily Giddy coins will go to each pool. The Giddy USDC pair has a 40x multiplier, meaning it'll receive 40 times as much of the daily reward as, say, Wrapped Bitcoin, which only has a 1x multiplier. And no surprise here, the Giddy USDC pair also has the highest liquidity staked into it. You'll have to decide for yourself what you're most interested in. Let's say you're bullish on Aave and you want to keep your exposure to the upside when Aave rises. You might choose to stake Aave and get Giddy rewards. Or maybe you're more interested in ETH or Matic. Or hey, maybe you're all about that 40x multiplier on the Giddy USDC pair and you want a smaller sliver of a much larger pie. You run the numbers, input your own assumptions about future price action, and you make your choice. Once you've chosen what coin you want to stake, here's how you stake on Giddy. If this is your first time staking into a DeFi protocol, congrats! Giddy up, cowboy! But do this all the way through with a smaller test amount first. It's tricky and you really don't want to make a mistake you can't come back from. It can be extremely nerve-wracking to move crypto around knowing that there is no safety net. That's the price of sovereignty. There is no FDIC, there is no bailout. Do this with a small amount first, just to make sure you understand the steps. I did that and I'm very glad that I did because I did make a mistake my first time through. It wasn't a big deal because I was sending a small amount, but if I was moving a larger portion of my portfolio and made that mistake, I might literally have had a heart attack on the spot. Be careful out there. Okay, get the coin you want. For me, it was easiest to trade some BTC for USDC on Coinbase Pro. It's quick and easy, and they have a tolerable fee structure. Maybe you'd prefer to use FTX or something else. Your call, you decide. Next, send that coin to an ETH wallet. I used MetaMask, which is popular, but sometimes confusing. A lot of this is confusing at first, but you learn along the way. You definitely will need some ETH in that wallet for gas. So I'm sorry to say this, load that wallet with, I don't know, maybe $100 of ETH to pay for gas along the way. You should also have some Matic, the native token to Polygon. Add some Matic, maybe $30 worth. That will last you a long time because Polygon fees are much, much lower than ETH fees. Next, you need to bridge those funds from Ethereum to the Polygon network. First, make sure you have Polygon enabled on MetaMask. You can do this from wallet.polygon.technology. Find the button up here, click connect. Now click bridge Polygon. Make sure you're depositing from the Ethereum chain and select the assets you want to bridge. That'll be your Matic, and for me, it's USDC. Enter the amount or hit max and click transfer. You'll need to approve the fees, and there are some fees. Bridging is maybe the most nerve-wracking part of this whole thing. There's a chunk of time where your funds are not visible in any of your wallets. And while the Polygon site tells you it'll take 7 or 8 minutes, in my experience, it takes more like 30 minutes. Don't worry. A few seconds after initiating the bridge, you should be able to look on the Block Explorer to see that it's been successful, even if your funds aren't visible yet. Be patient, set a timer, go get a snack, and you know what? If you've come this far, I think you should click that like button, because hopefully this video is helping you. And while you're at it, ring that bell icon and let me know down in the comments what it is you're staking and why you picked that coin. Okay, now come back in 30 minutes, let's finish staking. Good, we're getting close. This next step depends on what you want to stake. If you're staking a single asset like Wrapped Bitcoin or USDC or Wrapped ETH, then you're golden, we're almost there. Make sure MetaMask is set to the Polygon network and you've selected the wallet with your funds. If your token is not showing up in MetaMask, click Import Token at the bottom and you can search for your token, or if you need to do a custom token, like maybe the Giddy coin isn't showing up in the search, you can grab the contract address from their site at the top of coinlaunch.giddy.co or from CoinMarketCap cap. Even better, compare those two and make sure they're the same contract. Enter that into MetaMask, make sure the other fields populate, and hit enter. Now, from the Giddy Coin launch site, make sure MetaMask is connected and click the asset you want to stake. In the pop-up, enter the amount you want to stake or hit max. Click approve. This will bring up a signature request on MetaMask. Sign that, then confirm the staking on the coin launch site. If it doesn't work, you might have waited too long. I've run into this myself. I'm not totally sure why it fails sometimes, but don't sweat. Just close the pop-up and try again. You'll need to confirm the transaction again in MetaMask. Click through, and voila, you've successfully staked on Giddy. Congratulations! You should see your daily anticipated returns in the per-day column showing the dollar amount and the Giddy amount. Similar indicators are on the far right column to show your total rewards, and these numbers update every few seconds. You can see the update in the little progress wheel at the top left where it says farms. And remember how this was a video about daily compound interest? I've been staking for a few days now, and my daily returns are hovering around 2.3 and 2.4% of my staked value. If you reinvest all of that daily, and assuming returns stay at about the same level, it almost exactly doubles in 30 days. It is very straightforward to harvest your rewards and then stake your new Giddy tokens or swap them for other tokens if you please and stake those. Do it as much as you like. There's no limit. You can do this every minute if you want to, but there are some transaction fees when you swap, and you don't want to sit in front of your monitor all day just clicking stake, refresh, withdraw, stake, refresh, whatever. I do it every day, but I try not to obsess too much. Okay, still with me? Next topic. If you can't ignore that 40x multiplier and you want to do the Giddy USDC pair, you'll need to do some swapping before staking. Thankfully, this is very easy with SushiSwap. Sushi is a commonly used DeFi tool to trade one coin for another, and it's pretty straightforward. Go to app.sushi.com, or if you're paranoid like me, you can click the link at the bottom of the Giddy pop-up window, just to make sure you're at the right URL. Inside Sushi, select the coin you have in the top field. For me, that's USDC. To create a trading pair, you'll want roughly equal amounts, so I take the USDC amount, I divide it by 2, and then I enter that field in the top. This sets me up to trade half my USDC for Giddy. For the bottom field, you can search Giddy, or if it doesn't show up, enter the Giddy contract address like we did earlier to make Giddy visible inside of MetaMask. Once you've entered the amounts, hit approve below. This will produce some MetaMask requests for a signature, sign those, and pay the very small Matic fee. Once you've clicked through and approved all of those, you're ready to stake the pair on Giddy. Go back to the coin launch site, click the Giddy USDC pair, enter your amount, click approve, then approve the MetaMask signatures. Then click stake, and that should do it. Just look at your little rewards stacking up. And the beauty of compound interest is the speedy returns. Harvest and restake as often as you please. There is no gatekeeper here slowing you down. So that's staking on Giddy. A good question to ask before diving into all of this is, what are the risks? Well, if the Giddy token price tanks, that would be bad. It'd make your rewards less valuable. But hey, that's kind of why I'm sharing this with you. As Giddy gets more users and awareness, that'll drive demand for the token and ensure a healthy floor price for the token. The other risk you face is if you're exiting another position that does better than Giddy. But frankly, everything has been kind of boring lately, with Bitcoin hovering around 40K and ETH hovering around 3K for what seems like forever now. We've already talked about the Giddy team. They're not rugging anybody, and the 6 founders are all software devs. I don't think they're going to get hacked, but hey, crazier things have happened for sure. So there you go, Giddy DeFi. What questions do you have? And did I miss a step? And would you like to hear from the team? Like I said, I kind of know some of them. I'm sure I could get them on the phone for an interview. What should I ask them? Let me know down in the comments, and we will discuss it all in a future video. Thanks, team.